In this video, I want to show you one of the most powerful indicators on TradingView that will absolutely blow your mind. With this indicator, you will no longer be among 95% of retail traders who constantly get punished by big financial institutions and banks. With this new ICT fair value gap strategy I'm about to present to you in this video, you will be in the top 1% of traders who actually know what they're doing. Furthermore, you will always be on the right side of the market and profit from dumb money. If you want to take trading seriously and make a sustainable career in the industry in 2023, you definitely need to consider watching this video all the way through so you fully understand how to trade with this strategy. Like, subscribe, and turn on those notifications so you don't miss out. Now, without further ado, let's get into it. Okay, so first thing you need to do is head over to TradingView.com, and we're currently looking at Bitcoin versus the US dollar on the 5-minute time frame. Before we get into how to actually utilize the fair value gap indicator, let's first talk through what the fair value gap is. Fair value gaps are most commonly used amongst price action traders and are defined as instances in which there are inefficiencies or imbalances in the market. These imbalances simply suggest that buying and selling are not equal. Fair value gaps are created within a 3-candle sequence and are commonly visualized on a chart as a large candle whose neighboring candles' upper and lower wicks do not fully overlap the large candle. The reason why a trader might be interested in where these fair value gaps occur is simply that the imbalances created by them can become a magnet for the price in the future. Just like any other indicator on the TradingView platform, the fair value gap indicator can be added to your chart by selecting it within the indicator search tab. I will show you how to add it to your chart and what settings to use at the end of this video. For now, let's understand these key features. First off, let's start with these green rectangles. These shapes appear every time the market is making equal lows. Typically, the retail trader would place their stop losses for a buy position slightly below the level of support. Since big institutions and banks know this, they proceed to grab the liquidity that has been formed. When that grab happens, the indicator prints a green cross below the price. As soon as the stop losses from the retail traders get triggered, the market makers would usually take the price in the direction it's supposed to go. So they place a large amount of orders to move the price up. And this is where a bullish fair value gap and the shift of the market structure occur. More often than not, when such an imbalance is created, the market will test this level again. On the other hand, when the price action is making equal highs, the indicator will display red rectangles on the chart. This makes a lot of retail traders believe that the market has reached its peak, so they begin to enter short positions around this area. Stop losses for these orders are typically placed slightly above our level of resistance. Big players see that and they instantly fill the liquidity void. As soon as the liquidity grab for these sell orders happens, the indicator prints a red cross above our price. When the majority of these buy orders have been filled, the market makers then take the price in the opposite direction. And this is where the bearish fair value gap occurs. Based on the information we have learned so far, let me show you how you can outsmart the vast majority of retail traders. So the rules for a buy trade are as follows. First, wait for the market to form equal lows. Second, after these lows have been formed, the indicator must print a green cross below our price. As we already know, this indicates as a liquidity fill. Third, a bullish ICT fair value gap must be formed with a shift of market structure. And lastly, the price action must retest this level. Whenever this happens, a buy order should be placed at the close of the candlestick that retested the gap. The stop loss will be positioned slightly below the most recent bearish fair value gap. The take profit target will be set at 2 times the risk. We will be adjusting our stop loss to break even as soon as the market reaches a 1-to-1 risk to reward. Exactly opposite should be done for sell entries. First, wait for the indicator to print two red rectangles and a red cross to form above the price. Second, a bearish fair value gap must be formed with a shift of market structure to the downside. Third, the price action must retest the fair value gap. This happens when the candlestick reaches the level and gets rejected off it. For short trades, the stop loss will be set slightly above the most recent bearish fair value gap, and once again we will be targeting 2 times the risk. Also bear in mind that the stop loss should be moved to your break-even level the moment the market reaches 1-to-1 risk to reward. Here's another example of a short entry. As we see, all of our conditions were met and the take profit target was also triggered. Now let me show you how you can install this indicator to the chart. First step will be to log into TradingView.com and open the chart. Then head over to your indicator search tab and type in ICT SM Trades, which is this one here by MAJKY. By the way, the settings for this indicator will not change. It works really well on all time frames and all markets that have a high level of volume. You can use it for trading cryptocurrencies, Forex, or futures. Backtesting this strategy on the Bitcoin USDT 5-minute chart, we actually managed to get some crazy results. So as we can see here, after 100 trades, which did take us 2 months to find, we managed to get a 74% win rate using our 2-to-1 risk to reward ratio. After those 100 trades, it did actually manage to return us 427% profit on our account. So I definitely do believe that this strategy is viable. Backtest it and also forward test it with paper money before trading it live. Okay traders, that's it for this video. Thanks for watching. If you have any questions, please drop a comment down below. If you enjoyed, please leave a like, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.